Hey, what's up, traders and investors, and welcome back to the Trading Analysis YouTube channel. Bennett Tyndall here, coming at you Tuesday afternoon, July 19th, 2022. Now just a week away from the July Fed decision. Last week, markets closed lower. Semiconductors, they closed positive, with the SMH up nearly 3% for the week. With the move up, challenging resistance, will the SMH not only lead markets out of correction, but will the SMH and semiconductor stocks lead the rotation back into growth? That's the question we're going to look to answer tonight as well as tomorrow morning on our YouTube live stream. So sit back, relax, we'll go full screen on the charts and see what's happening in the SMH. Alrighty, going full screen on the charts, we're taking a look at the SMH on the weekly time frame, going back to the December 2018 low, at which point markets found support. The SMH proceeded to rally some 89% prior to falling victim to the coronavirus pandemic. We declined 37% into March of 20, found support, and rallied better than 230% into last November's high. Now, peak to trough, we've seen another 40% decline, and we're now challenging upside trend line and key previous support resistance, which if broken to the upside, could suggest that the SMH is gearing up to lead the rotation back into growth. Moving lower in the time frame scale from the weekly to the daily chart, we can see the previous support demonstrated in March and May of 21, which we are now back testing and could turn into resistance. In fact, looking at the decline into May from this year, you will notice support was offered at that March 21 low. We then rallied back. On the rally back, we met resistance at the 50-day moving average. We now have a high from March through June that we can connect for an established downtrend resistance line. And you'll notice that after meeting support at the March 21 level, we rally back, meet resistance at the 50, break under. As we break under, we temporarily turn that 216 handle area previous support into resistance. We then make a new low early in July, and here we are once again challenging not only the 50-day moving average, but we're also challenging trendline resistance. In addition, it is worth noting that we have seen positive relative strength divergence when compared to the January 29th low from this year. It was in January of this year that on the daily chart, the SMH established an RSI reading below 30. And as you can see here, as we make a new low in price, July 5th, we technically have a higher low in relative strength. We now need to see a combination of 50-day and trendline resistance moving average, 50-day moving average and trendline resistance broken to the upside. Upon a break to the upside, I would be looking for a new high in relative strength that exceeds that of June 1st. Now, these are the key traditional technicals that I feel you should all be aware of and all be watching. I am a bit skeptical about the fact that we failed to reach the weekly 200 moving average, which historically has been a fairly key area of support. But just because we failed to meet the weekly 200 moving average doesn't necessarily mean that this correction is not complete. Now, working you from the weekly back down to the daily, I'm now going to introduce the more advanced technicals. Looking at the more advanced technicals, which includes our Elliott wave count for the SMH, I first will close out my indicator template so we have a bit of a better view of what we're seeing here from an Elliott wave perspective. Now, in the world of Elliott wave, we have what are called motive waves and corrective waves. Motive waves are trend establishing waves. They move in the direction of the higher degree trend and typically unfold as a 5-wave subdivision. Here you can see a perfect example of that from January in through January 28th, where the SMH moves down in a wave 1, back in a wave 2, down in a wave 3, back in a wave 4, and finally down in wave 5. It's from the low in January that we proceed to enter a sideways counter-trend corrective wave. Remember, we have trend establishing motive waves and we have counter-trend corrective waves. Counter-trend corrective waves move opposite the direction of the higher degree trend. For an example, or as an example, if the quote higher degree or more dominant trend is a 1, 2, 3 wave move to the downside, the counter trend rally in this instance occurred in the B wave. So what actually happened is markets sold off into support. We then see a counter trend corrective rally, which netted us between a 50 and 61.8% retracement of the trend establishing decline. And from there, from the highs in late March, if you would have taken a measurement, a Fibonacci measurement of the initial decline from January and projected it from the late March high, it would have provided you with a downside objective of $215.09 a share, 215.09. That level is a technical level that represents a measured move decline. Said otherwise, the move from March down would be equal in magnitude or percent correction to the January decline as soon as the SMH reaches 215.09. Now, it is worth noting, and allow me to clean this up even further, it is worth noting that the equality projection at 215.09 did offer support May 12th. In fact, if I drop a price label on the May 12th low, you'll see that it comes in at 215.23 versus the 215.09 fib level. From there, we only rally back in 3 waves, meaning this is still a corrective rally. This is not trend establishing. We then complete further south, exceeding our equality projection to wave A. This is an overshoot, and this is not uncommon. Another very key level that I am watching in the SMH involves the corrective trend channel. Said otherwise, you take a trend line from the January high through the high in March. You project that over the low of the A wave. So you project your parallel trend line over the low of the A wave. That level, that trend line, when used in combination with your fib projections, will often establish zones of support that act as reversal points. So what I want you to notice is, although we broke equality to the initial January sell-off, when we progressed lower, we never broke south of our blue corrective trend channel. This suggests that, in fact, we did conclude an ABC corrective retracement. This ABC corrective retracement has now given way to an upside breakout to the tune of 17.78% in the SMH. Now, remember earlier I mentioned we have trend waves and we have corrective waves. Our job now as Ellioticians and with our clients comes in on the smaller time frame, and what we now need to see is the makings of a trend establishing move higher. For the time being, all we have are 3 waves that are more or less equal to the initial. I should say we have 3 waves higher that for the time being is best counted and best viewed as a measured move rally, meaning we have a directional motive wave, we have a corrective wave, and now another motive wave. What we are watching with our clients here at Trading Analysis is for the SMH to establish itself in a trend establishing motive wave. And if in fact we see evidence of a trend establishing motive wave, it could be the evidence we need to hit the gas pedal in the SMH and look for positive rotation back into semis. So that's the SMH. Again, taking you down to the daily time frame. I'll go ahead and bring those resistance levels back in for you. Those resistance levels include the support from May. I'll go ahead and increase that in size for you. You have downtrend line resistance. And in addition to that, you also have the 50-day moving average, which, as you can see here, we closed just above with today's trading action. So that's the SMH. We are watching it very closely to morph into a 5-wave trend. If we see 5 waves up and 3 waves back, we will be getting very aggressive in semis with several names lined up. Let me take you through a couple of those now. First up, AMD. Taking a look at the chart of AMD. If you've been tracking my analysis on AMD, we've been awaiting a fourth wave correction. We have been targeting a move down to between 67 and 77 for an upside reversal. What's beautiful about this corrective retracement is it offers a confluence of support from multiple degrees of trend. We have not only equality to the wave 2 of the same degree, which in the world of Elliott wave, corrections of the same degree or time frame, if you would, will often be equal. So this particular decline met equality to wave 2 at 77. In addition, it also met equality to the initial decline at 75. And furthermore, if you dive down into the subdivision, you will notice we had another degree of trend offering support near 75. What's beautiful about this chart is this support all stacks up into the previous fourth wave of not only one but two lesser degrees. Another chart that I have my eyes on is the chart of Qualcomm. The chart of Qualcomm began a trend establishing 5-wave rally back in January of 19, up in a wave 1, back in a wave 2, up in a wave 3, wave 4 flat. Our downside targets were between 107 and 117. We've seen a sizable bounce back from shares of Qualcomm. Other names of interest that continue to remain on our radar in the semi space include Applied Materials, Taiwan Semi, AMD, which we just looked at, Lam Research, NVIDIA. We've got a lot planned. Watching it very closely. Check us out anytime, tradinganalysis.com. Hope you enjoyed the update, and I'll see you on the next video. Take care.